Hey guys, I'm Harshit from Kepler Wealth. Welcome back to our YouTube channel. Welcome back to our YouTube video as well. आज की वीडियो में we will continue our all about trading psychology series which we have started way back 3 weeks ago, and now today we are going to continue part 4 of that same series. And I hope you have a wonderful weekend because obviously markets are off Saturday and Sundays. And let's quickly begin with our today's session. We will quickly see 10 to 15 points which are super crucial and which is handpicked from my experience from the markets as in general. So it's basically no copy paste. It's only handpicked points from me and my team's experience from markets, and whatever markets have thrown, we have basically took, and we have basically shaken the markets as well. Let's start today's session. Yeah, so we were at 36 point. Fear is irrational. Each trade is unique with a probable outcome. This is super important. See, fear is obviously uh, emotional emotion. See, as a human, we all fear something or the other, correct? But which does not mean you can't control your fear. Having fear is a natural for everyone. But controlling your fear is not natural for everyone. It is artificial for some people. And you see, every trade you take in markets is a unique trade. Do you agree? Yes or no? Let me know in the comment box. So I don't understand, if every trade is unique, then why one single trade judges your future trades, or why one losing trade judges your upcoming trades? No, every experience is unique in every single trade, and that's the fact and that's the reality. So make sure you treat every damn trade in a unique manner. You perceive every trade as if it's unique, because it is unique. Also, if you have to be a great trader, then you have to consider and you have to make sure that you experience every trade newly, freshly, without even bringing one single thought of your past trades. That's super crucial. Next point: have a conducive to learning state of mind irrespective of what has happened in the past trades. See, I always tell my team, first focus on learning, then remove the L, you will start earning. So not just in the beginning. Markets are huge. I mean, you have to learn consistently. You have to do some learning on a daily basis until to become a successful and a professional investor. So therefore, learning on a daily basis is super important. No matter what, you have to learn something or the other. And obviously, you see, every industry is like that. I mean, if you are a doctor, you have to learn something or the other. If you are an engineer, you have to keep yourself flexible and adaptable with the technology trends going in the markets and all of that. Similarly, with the markets, you have to be in a learning zone no matter what the heck happens in your journey. If you are a profitable trader, if you are a non-profitable, does not matter. Learning will never stop, that's for sure. Perceive the market as if you are a winner. This is super important. Now, perceiving a market as if you are a winner, it is a part of your mindset. It is a part of your attitude. You know what I mean? Every successful profession needs some sort of spark, some sort of attitude, some sort of value, some sort of mindset to succeed, because successful people win twice. First, they win in their head, in their mind, and second, in the reality. So make sure you have that attitude that you are the winner, and then trade, and then see the accuracy of your trading will increase exponentially from 40 to 60 to 80%. Make sure your mind does not associate what is the market, what is in the market, and what is in your mind. This is very, very important. There are two things, M for mind, M for market. All right. Now, what we perceive or what we see is in our mind, but which does not mean it is true in the market. Probability will be, it will be true, it will be false, 50-50, but it's not necessarily the case. All right. So keeping market a separate entity and keeping your mind a separate entity is super important, because these are two things. Let's say there are 100 traders and one market. There will be 100 different perceptions, but market is only one. How do you see the market? How do you perceive the market? That's a different story. So make sure you keep your mind separate and market separate. Do not get impacted either too positively or too negatively by your last trades. This is super important. See, traders are rational rats in short form, or for lack of better word. What does that mean by is, traders are humans, they have emotions, they feel, they get hurt, they experience every damn emotion a human being experience, but experiencing emotions and reacting to that emotions is not the same. Traders do not react to emotions. They will win 1 crore in one trade, they will lose 1 crore in one trade, but best professional traders are those which are neutral after winning and after losing the same money. That's the sign of great professional trader and investor. Make sure you are neutral. You are not too positive, too happy, or too negative, or too depressing. No, just be neutral. Secrets. No, sorry. Yeah. Trade without fear and confidence. Perceive what the markets are offering. Be in the moment, opportunity flow, enter the zone. Yeah. Secrets. These are 3-4 points basically. Trading without fear and confidence. See, fear, there is no such thing for two people, two profession. One is our trader investor, and second is our entrepreneur slash businessman. These people don't fear at all. They are the risk takers. They take risk. They take basically calculated risk. They know when they win, how much they will win. When they lose, how much they will lose. Traders and entrepreneurs. Um, Once, yeah, perceive the markets. Yeah, perceive what the markets are offering. Now, this perceiving what markets are offering comes with a great deal of experience. You have to spend a lot of time into markets, watching charts, understanding market structures, all of that. So it comes with a great deal of experience and wisdom. Do not have unrealistic expectations from the markets, and take what the markets is offering. This is super important. People, beginner trader come into markets specifically in option buying to make 1000% a month, 100% a month. No, you can't decide how much market will give you. You will have to keep your base expectations low, and you have to take what market is giving, what market is offering. If you have unrealistic experience, let's say August 2023, you have an expectation of doubling your money in a month, but due to some economical factors, market is not moving at all. So you taking risk exponentially and exposing your capital in the markets increases way more higher, because your target is doubling your money in this month, and market is not moving at all. So you will obviously expose yourself and your capital to a higher risk, and therefore having unrealistic expectations is dangerous in markets, especially when it comes to protecting your capital. So just steadily grow your equity curve, just like steadily, because see, compounding is important in markets. if you even start with 10% a month or 5-6% a month, after 10 years you will see what the number is, depending on what the heck is your base principle or what the heck is your base corpus. Completely understand the psychological realities of trading. This is super important. I would suggest reading book's name is Trading in the Zone to understand a trader's psychology. There are a lot of factors, there are a lot of psychological points which you need to take care of while trading, investing, and all of that. Make sure you build your psychology, because 80% is the psychology and 20% is your news, analysis, fundamentals, technicals, all of that. So psychology is super important. Adapt to the different market behaviors. This is important. See, professional and great traders, investors are those who are open-minded and who understands the philosophy of uncertainty. See, life is uncertain, life is risky. Similarly, markets are uncertain, markets are risky, because the nature of market is uncertain and risky. So therefore, you have to be open to whatever markets throws at you at any point in time, because yeah, because it will at some point, it will in the journey, it has to, because there are so many cycles in economic cycles out there. I mean, recession and inflation and prices getting higher and higher, consumption increasing, production decreasing. There are so many of factors, climate change, weather, so many fundamental factors. So you have to be flexible and you have to adapt to the markets, and make sure you take whatever markets throw. And yeah, market can do anything at any time. This is also important. This is basically the quality of philosophy of uncertainty. Markets are super uncertain. No one actually knows what will happen next, because let's say you are a retail trader, and uh, you 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 breach to say, I know everything, I know what the heck tomorrow will happen. Let's say your view is bullish for tomorrow, but F2s and D2s view is bearish, and they start selling, they start shorting. Your prediction fails, right? So basically, just be in the now moment, in today moment, and not in the yesterday or tomorrow moment. Because trading is all about going in the flow, going in the opportunity flow, and making and booking profits. So these were the 10 to 15 points for today's session, and there are pending 15-20 points which we will definitely see in the upcoming part 5 on on next Saturday. So I hope this video was insightful for you. You as a trader, it's important to develop and build the psychology before entering into markets, and make sure you enter into markets with a small limited amount of capital, the capital which you can afford to lose, and not huge capital like 51 crore and all of that. No, you have to learn for the 6 months, 1 year, 2 year, whatever, depending on your learning capabilities and potentials. And psychology is super important. This series you can watch a hell lot of times, part 1, 2, 3, 4, and finally part 5 we will see in the upcoming weekend, or upcoming sessions or something. And these are basically 50 to 60 points which I have basically noted down from my experience and from my team's experience. So that's all from my side today. Do like, subscribe, share, and comment down in the comment box, and let me know what are you doing to build your psychology, and what are the points you think is super important to be a professional trader. Thank you. Bye bye. Have a great weekend.